I think what's important about liquidity grabs is just trying to understand overall what it means to even grab liquidity anyways, right? So like it doesn't have to be too complex. Like you don't gotta go and like in terms of like structure, right? Like go off of what you see. So like for instance, when you have a liquidity grab, for instance, let's just say this is like some type of range formed there from here, this is your resistance, right? So that's your resistance and this is your support. So within this range here, let's just say you have some type of structure pushing price up already. All right, this is what you have formed. It might not be obviously perfect, but just show you guys an example. Right, so let's say you're printing some type of range here, and all of a sudden you look somewhat like this. So let me just go ahead and draw that. Maybe I can draw one more candle here to show you guys a better idea. All right, so let's say this is the range that you have printed here on price. Let me actually draw one more bearish candle. All right, so let's say this is the range you're in, right? So in this situation here, it's really just a break of structure. So when you have a liquidity grab, and before I get into the drawings, what you have really is you have higher highs, higher lows being formed. That's all that really is. So like, for instance, you're coming up, coming down, you're coming up, you're coming down, you're coming up, you're coming down, you're coming up, coming down, right? This is just like a higher high, higher low, higher high, higher low, higher high, higher low. The higher lows are typically the liquidity grabs to drop up, right? Because the higher lows is just a bottom wick being formed, right? So there's different ways to view liquidity. There's a way you can view it by, for instance, you can look at liquidity grabs within a range, or you can look at liquidity grabs within another example, which would be just a candle. Because if you have a candle looking like, let's say looking like this, right? You have a candle looking like this. The next candle that comes, looking like this. The next candle that comes down, breaks the lows, that can also be a liquidity grab. So liquidity grab could be this, or it can be this, or it can be this. There's three ways to view it. And it all kind of falls back to the same shit when you just cycle back and forth. So let me show you guys how that is and why that makes sense. So if this is the trend you're pushing into, you're bullish in this trend and you're bullish right now, right? All of a sudden you form some type of resistance and then you form some type of support. What I'll wait for and what I'd like to see is I'd like to see if you can break the lows first, aka what we're waiting for today on price before coming up. If you break the lows here, great. You're on top of breaking the previous candle lows, you're also breaking structure, right? And since you're still respecting the support, any given point, if this kind of were to flip bullish, there you go. You can say that, okay, that is now your bottom wick, that is now your liquidity grab for you to drive up to the top of the range. Because if you look at it from a different perspective, what is this really like? What's really happening here? This is just a fake out. You might see candles looking like this on, like, let's say this is like a 1 hour time frame, right? But on the 4 hour time frame, or on a different time frame, what you might see is you might end up seeing that this candle right here will look like this on the smaller time frame. So on a let's say it's like let's say this is the one, you go down to the 15-minute time frame, I'll say you will see something like this being formed likely. So you open up like around here, right? And then all of a sudden you're starting to break the lows now, right? So let me go ahead and just do this real quick. So this could have been a little more cleaner, but you're starting to break the lows and then all of a sudden you're coming back into the range. That's all that's really happening. And as you come to the range, you're going to continue to pop up. So you guys might not see it, but you see how like this is a 1 hour candle right here on the 15-minute time frame. You have four 15-minute candles that equals up to a 1 hour candle. Well, those 4 candles are really just doing this. So like, what is it doing there? It's just breaking the ranges to continue pushing up, and that's what a fake out. So it kind of all falls back to being the same shit. It's just a fake out for us to drive up, and you guys know that when you have a fake out, you will likely continue to fill the range, plus on top of that continue to trend up towards the next resistance. And that's why when you break all the lows first while still holding that support, there's a high chance that once you flip bullish, you're going to drive up, aka why we took the buys yesterday after news. Same thing happened. You broke all the lows, you flip bullish, and that was our buy stop up because we understood that that was just a fake out on a smaller time frame. So as you had a fake out on a smaller time frame, what's being formed there as well? Going back to what I said earlier, this is just a higher high, higher low, higher high. So it's kind of all the same type of thing. It's just from different perspectives, right? But once you get used to doing that, like every candle you see, like these are steps that you gotta take in your mind to read these candles. Like every time you see a candle being formed, like take note on what's happening on the small time frame. Like are you breaking below support? Are you printing a fake? Are you printing a bottom wick? Whatever that is, right? But you want to make sure you get used to reading candles from this perspective so that you can have a better understanding of what price is doing all the time. But yeah, that's liquidity for me. That's how I would identify liquidity. I mean, I could have just said, liquidity is just price grab liquidity to drive up, but in terms of price action, that's what typically would form. So same thing here. If this is the range you're in right now and you break the lows at 2016, right? You're breaking what? The daily lows. So now you're adding on top of the, for instance, grab liquidity to drive up situation. On top of that, you're also saying that, okay, well, the daily, if it were to come down and break these lows, you'll be grabbing liquidity on the 1 hour time frame. But on the daily, you're just re-breaking the daily lows. And if you re-break the daily lows and then you flip bullish, there's no reason that's why you would do that aside from the fact that you're going to drive up. So therefore, your positions will be then on the flip up towards the top of the range from 2023 to 2029. And that's what you want to take advantage of, right? That pull right there. And that was the move that we caught yesterday. If you go down to yesterday's move, you're going to see the same thing. It was around here, right? So I think it was the 30-minute candle for 8:30. You kind of came down, you broke all the lows first, right? You broke all the lows first, and then you came back and you flipped, and that was your buys. Our buys was the flip of the candle to drive up towards the top of the range. And that was it.